Let's go through a simple explanation of mirror and double entries. To illustrate, let's take a look at two books of account and how to understand how entries end up posted there. Let's begin by getting to know our three friends. This is Jeannie. She's the client. Our friendly guy here is Noor. He's Jeannie's custodian. Noor has a friend across the Pacific over in Australia, and her name is Sheila, and she acts as the sub-custodian for Noor. She's a great help to Noor as Sheila is a specialist in the Australian market and can, in Noor's behalf, legally keep assets that can't leave Australia. That means if Jeannie wants to buy assets in Australia, Noor will instruct Sheila to take custody of the assets for Noor and ultimately Jeannie. Alright, to keep track of the assets and values, Noor records these in his books. One of the books is his ledger. The ledger shows how assets move in and out of his possession. Sheila, on the other hand, keeps track of another book, which is the statement. The statement shows what, at a given date or point in time, the value of assets the client has with the sub-custodian. Let's have a look at how securities or shares will reflect on Noor's ledger and Sheila's statement following a purchase. Jeannie is willing to buy 1,000 shares of an Australian company. The custodian, Noor, instructs Sheila, our sub-custodian, to take physical custody of these shares. These shares never leave Australia. In the sub-custodian statement, it will show the inclusion of the 1,000 shares. The custodian's ledger will also show the same assets credited because the end result of the transaction is that 1,000 shares have been added to Noor's safekeeping, simply held by Sheila, the sub-custodian. Because both books simply reflect the same entries, we call these mirror entries. What happens when cash is involved? Let's say several months down the line, the shares Jeannie purchased paid out dividends. Sheila, the sub-custodian, collects the $500 in dividends from the Australian company. Once Sheila collects the dividends, she transfers the cash to Noor, and finally, Noor hands over the cash to Jeannie. In the books, the statement will show that the sub-custodian has collected $500 in dividends from the company, and this gets credited to Noor's account. So the statement credit is sent to Noor. Noor debits his account and credits the dividend to Jeannie's account. Because the ledger will show the transaction between the client and Noor, it will show that Noor moved $500 from its own books to pay Jeannie. That means Noor's ledger will show a debit of $500. Because the book reflects entries on opposite sides of the account to show where the asset entered and its subsequent exit, we call this double entries. To summarize, when shares are bought or sold, because there are no opposing movements between the custodian and sub-custodian, the ledger and statement will show mirror entries. When cash is involved, because it comes in from one end and goes out the other, double entries will show up instead. Again, this is a simple look at mirror and double entries.
Created using Powtoon.